Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 167. Today is January 17th, 2025. The real deal is here. The markets are moving. We got a lot of news. AJ, how you doing? How you feeling? Welcome to the show.
Hey, today
Your
is
show.
options expiration day.
Options expiration day and a lot of economic news. What do you think is the biggest driver to start the week? Is it this inflation number? Is that where we're feeling the most optimistic?
Yeah, I think that folks feel a little bit relieved this week. We got a couple of different reports. I'm going to pull up here the economic news calendar. So on Tuesday, this producers price index final demand, but it showed that things were either steady or a little bit declining as far as inflation. But the big one that people looked at was the consumer price index on Wednesday. It also showed that things was either steady or slowly slowing down, which is a good sign. Retail sales as well slowing down. Industrial production today was a little bit unexpected in that it shows that things are heating up. Factories are churning out product. So, not sure what to make of that, but most people look at the CPI, and that's the day that we had a real pop. We had a pop in price action on the S&P on Wednesday, and then we saw a little bit of kind of comfort or say profit taking on Thursday because it was such a pop. And then today we're seeing a little bit of pop, but it's already, tending to people are taking profits during the trading day today. We're starting to see a doji pattern form. We'll see what the rest of the day plays out.
Yeah, I was looking at the CNBC headline for today, and it was Dow rises 300 points. S&P heads for best week since November as rates fall. So the rates aren't falling. It's just the sentiment for the rates to fall has increased. Correct?
Yeah, I mean, in the beginning of the week, we saw actually bond yields were somewhat up, right? And we even saw that the longer term bond yields are up. It's really interesting how this whole monetary policy works. It's like the Fed can, directly play with short-term lending rates. That's the interest rate that, everybody tracks that the Fed either raises or lower, but then the long-term lending rates are typically based on, the demand or the supply of those 10-year treasury bonds. That's what a lot of companies like mortgages for houses and even car loans are based on that longer term rate, which the Fed, through traditional means, their interest rate hikes don't really have much control over. Now, you and I have been talking about this other tool that the Fed has used just recently that they rarely, talk about or provide, visibility on. All the information out there is free to look at, but do people, number one, understand how that tool works, and number two, do they know to go look for it? You and I always point to it, but the Fed is doing quantitative tightening, meaning they are selling those long-term treasury bonds that they actually had bought a few years ago during the COVID pandemic. They're selling them back now, and so that's actually having an effect on the 10-year treasury bond. So, you know, there's these different tools, but yeah, the rates started out higher, but they slowly were declining this week, especially amid news of, things being, under control, or at least that's the guys this week.
And you're referencing the 10-year as that instrument. But I know we also sometimes look at the Fed funds, right?
Mhm.
Has that sentiment changed at all? Are we still on pace for a 1%? Is that kind of where we were the last time we looked at it?
So here's the Fed, where they are with their selling back of their bonds. I think that's what you're mentioning here. And, their goal is to return it to pre-pandemic levels, which is around $5 trillion of IOUs to the Fed. We're currently at 6.8. So we're about halfway there. And you'll notice on this curve, if you remember, the pandemic came, and within like weeks, they increased the Fed IOUs. I call them Fed IOUs. Because basically what they're doing is they're buying treasury bonds, they're buying corporate bonds, they're buying mortgage-backed securities, and the Fed only buys the best of the best. So they don't buy any of the junk bonds. They buy very good bonds that are guaranteed to pay back. And, within the first couple of weeks, you can see this big jump that they did where they bought a whole bunch, and then they slowed their pace until they got to a point at the end of, 2022, roughly, where they decided to start selling them back. And so since 2022, so now we've been kind of on a 3-year cycle. We've been selling them back, and we're just about back to where, after that initial tranche from the pandemic, where we started to then just drip it in, they've been dripping it out. They can't take it out as fast as they put it in. So it'll probably be, assuming that nothing happens that requires them to start buying bonds again, nothing happens in the economy, it'll probably take another 3 years or more to get it back down to the level that they wanted. And then I think what their plan is, again, assuming no big global craziness happens, which requires them to use this tool again, I think they're going to start to let some of those bonds expire, right? They're 10-year bonds. And if you think about it, if they were buying them in 2022, 2021, 2020, they'll start expiring in 2030, 2031, 2032. And you'll see that's what they were actually on track to do before the pandemic came. So when you see this little dip from where they held it for so many years, that was because the bonds they bought back in 2008 were starting to expire in 2018. And I think that's what they would wind up doing. Once they get it down to like that $5 trillion level, then they'll let the rest of it just expire
So I have
off.
a question on this. Who's in charge of deciding this? Because are we not in the midst of the new leadership stepping into both the Treasury and the Fed, who seem to be kind of being led in the direction of where the president wants them to go? And so, curious, does that play into effect as to how far we might come down on this chart?
I mean, the Fed, in theory, is its own body. Not, maybe the Fed president is chosen by our current leadership routine, but then they're supposed to be left alone. Now, has that happened throughout history? Maybe, maybe not. But in theory, the Fed is doing monetary policy. And, we can get into the discussion of monetary versus fiscal policy and how they both work. Monetary is like these big brush strokes, right? Big, giant, like, let's paint the whole wall white or paint the whole wall black. Whereas fiscal policy is about, hey, let's do some shading here and there. So we could actually talk about that if we wanted to, whether that's this episode or not. But with respect to monetary policy, this is being, decided by the Fed grouping, which is, a group of Fed governors, each representing a territory here in the United States, and being led by Jerome Powell, who's the Fed chief.
But could he not be replaced? He could be replaced rather quickly by somebody of President Trump's choice, correct?
In theory, but then again, that Fed person, and the question is where is their loyalty? And I hate to use that word, but the truth be told, the Fed presidents, for the most part, have not been influenced by politics. So even if Jerome Powell is replaced by somebody that Trump picks, you would hope that they would be focused on what the mandate the Fed has, which is controlling inflation and looking for maximum employment here in North America. That's the two mandates of the Fed. So you would hope that even though they get chosen, they don't actually do their job, with any sort of slant to it, in theory.
It's just interesting to see these like Senate and congressional hearings where the questions that they ask are just like wild. Like,
And well, and so there is a difference between the cabinet, the actual, organizations that report to the president, like State Department and Defense Department and Attorney General. Those are all people that actually report to the president. The Fed president doesn't, there's no chain of command to the president. That was designed on purpose, that monetary policy would be held to a different, um, uh, there's really nobody that the Fed president reports to except for should he get replaced. But it's not supposed to be related to the president like those other cabinet that we're watching on TV now as they and on the different social medias as they get grilled by the
because
Senate.
those basically rotate with the administration, right?
Yeah, sometimes administration, more when I was a kid, sometimes administrations have people carry over in their jobs because they just did their jobs well. Now we're seeing such polar opposites each time a new administration comes in that they want to clean house and get a whole new bunch of leaders into those roles. I'm seeing that firsthand here in Washington, D.C., because you go to like a dinner party with your school children's parents and you realize you're in a room with some of these people who are either in the Congress or aides to the Congress or their cabinets. I see them all the time just picking up my kid from school.
Yeah, and so for now, Jerome Powell is safe, but starting on Monday, he might not be so safe on day to day if he says something that upsets the market, right?
Maybe it's a lot more difficult to replace the Fed chair than it is, to replace. Look at Greenspan. How long Greenspan was in play? He was in play for the Fed monetary. And to be honest, when it comes to how the world works, you almost realize that the Fed chair has more control over things than even the president. Well, and same with some of the CEOs of these biggest companies. They kind of have, monetarily more pull in what happens in the world than even the president does.
I read that Donald Trump's going to give Elon Musk an office at the White House.
Yeah, I read that too. You got to be very careful. And again, you're getting it. I've lived here just about, well, not my whole life, but I lived here for until I was 18. And then I moved back when I was around 40 years old, and have lived there for the last 10 years. But nothing's really changed. The scoop is you really have to, when you're starting to clean house, and it's interesting because one of the first presidents that really cleaned house, like really shrunk government, was President Clinton, if you can believe it. President Clinton went through and kind of really, especially in one of the more biggest agencies, which was the Defense Department, he really cut a whole bunch of jobs. And it was because people were like looking at some of the contracts that, and we're getting into the weeds here, but they were looking at some of the contracts. This was during the Reagan administration. They were looking at some of the contracts the government was giving to some of the defense people like Northrop Grumman, Boeing, Lockheed, and they were starting to try to dissect it, and they were coming up with these numbers like, man, for that amount of money and for what that defense contractor is delivering to the U.S., a hammer costs like $500,000 or $1 million, and it was getting the public upset, and so by the beginning of the 90s, it was like almost President Clinton's mandate when he got into office after Bush Sr. to cut down the Defense Department, because there was almost like there was a lot of hype around waste. But when you think about it, right, there's two different mentalities when these different groups come into office. And I'm not even going to call it Republican or Democrat, because over my lifetime, it's almost flip-flopped who believes in what, and I'm not even going to put it in, liberal versus conservative versus progressive, because again, over my lifetime, some of these principles have flip-flopped. But one principle is, hey, we collect all this tax money, let's distribute it in either services, or even it was Richard Nixon when I was really young who was coming up with the UBI, right? Why don't we just give people some money every month from the government and basically redistribute wealth? So one thought is, let's give the money to everybody, right? Let's spread it out in the form of whether it be services or even like the UBI that Richard Nixon brought up, just give them checks every month, right? To just because you're a U.S. citizen. The other thought process is, well, why don't we instead give business owners a bunch of money, and they'll hire people, give them jobs, they'll rent houses to people, landlords, right? And we'll get things moving that way. So that's kind of the trickle-down thought. And so those two different principles have been out there. And the question is, which one distributes the money better? Because monetary policy is like, they look at the overall picture. They group billionaires in with people who are barely making paycheck to paycheck, and they make sure it works for the average person. But what we've noticed is this huge extreme between who's got a lot of money and who's got little money. That's fiscal policy, right? And that comes to these whole thoughts on what to go on. And one of the ways that you can distribute money that's agreeable to everybody is to give them government jobs, right? Instead of just handing them a check every month, and saying, here's your universal basic income for being a U.S. citizen, here's $300 a month. And if you want to earn more, great. If you want to just live on it, instead of doing that, you give them jobs, right? And the jobs come from the government. This came from FDR during the Great Depression. You give people jobs and you pay them that way, so you get some work out of them. And so that's all well and good. So you literally pay people to do stuff for the government, and that's a way for distributing wealth to people. And you get something back in theory. But then you have somebody like Elon Musk who comes in and says there's too much waste in the government, right? So what's going to happen if you scrap 5,000, 50,000, that many government workers? Well, they're going to have to go find jobs in the private sector. And as you and I talked last week, they're not hiring in the private sector. So you have to be very careful about going in and trying to make the government efficient, because somebody behind you actually was like, well, it doesn't have to be that the government's efficient. This is how we're redistributing wealth and getting some sort of work out of people. So yeah, I'm almost a little bit worried when somebody comes in and says, hey, we're going to fire government workers, because now where are those people? If you don't have a way for them to get private sector jobs, you're going to create a big problem in the economy.
Yeah, and I feel like last night was Biden's farewell address, and
oh
the
my
rhetoric
gosh,
I was hearing was that he was basically claiming that, oh, the oligarchs are now going to be taking over, so keep an eye on the wealth distribution, or the gap between the wealthy and the not so wealthy increasing. And then I saw the statistics, and it was like, yeah, that happened under your watch too, Biden. So very
Well, and also you talk. I saw a very good interview where and I used to live in California in the Silicon Valley, so there's a lot of tech sector stuff that I used to be part of at a pretty high level. And so you talk to a lot of the CEOs of some of those big companies in California. In California, their economy, that state alone is on par with countries like Italy and France and stuff like that, right? So you pay attention to some of the companies that are based in California. And even though, as a company they did well, their biggest complaint during the last 4 years was that this administration never wanted to sit down and talk to us, right? They never wanted to make us part of the solution. They just pushed regulations on us. And when we wanted to come to the White House and talk to them and say, hey, we are okay with being regulated, but let's talk about it so that at least we have some skin in the game. These big, I mentioned earlier in the show that there's these big, some of these big companies like Google and Apple are not just US companies, and they're almost as important as, the US government is, right? And so you kind of want to have these guys at your table talking to them about solutions and cooperating on how do we get this to work. And what their biggest complaint was, yeah, sure, we grew, we did all this good stuff over the last 4 years, but we weren't allowed to be part of it. We were told what to do. So you're almost seeing the pendulum go back. We'll see if it gets better. There's a lot of unknowns, and I think that's what the Fed has been cautious about. There's just so much unknowns because there was so much unknowns. We have history. We know what the last 4 years of Donald Trump was when he was president. There's so many unknowns that it's almost, well, you were in the pan, but now are you jumping in the fire? Nobody knows. We're just hoping that things are going to get better, but you never know, because sometimes when you're talking about annexing other countries or annexing territories or renaming things that have been called, bodies of water, you're almost like, oh my God, who's in charge here?
The Greenland thing, I kind of support. I think, strategically, I saw a video where they compared the size of Greenland to America. I mean, like, that would be a pretty big achievement. Can't name a city in
There's a lot.
Greenland, but
Greenland has a lot of rare. I understand it from a strategic standpoint. You can mine a lot of the rare metals that are going to be needed in the future a lot more than they are right now, and that they have been. So Greenland's a good place for that kind of activity. But otherwise, Greenland's kind of
the giant ice.
Eric the Red and. Yeah, it's like Leif Erikson. It's like the Vikings, and maybe you don't want to mess with the Vikings. I don't know.
Well, I mean, there was a couple influencers that like went to Greenland, like some of the guys that were Trump supporters, and they were like, "You guys have never had McDonald's. You guys have never had a Raising Cane's. That's what America is. We're gonna bring you all these things." And the young bros were all for it, right? So it really kind of becomes what's the sentiment of the entire population. But this is,
I mean, I really don't think these are the lowest hanging fruit for what we can do to make the economy better here in the United States. But that's just my 2 cents. I think we're being distracted.
And that's what we're in for the next 4 years, because that's kind of what we experienced the last time. However, I'm a little bit more optimistic. I feel like we're gonna it isn't gonna be so much about Democrat and Republican. Trump may go off and say something to some people, but I do think he's overall going to try and improve things just because of the people he's putting in place. At least that's what the sentiment that I'm hearing, and seeing
Sure.
the stuff that's happening in California with how they're running the government on a more local level is it's kind of eye opening. Where, I saw a good interview where I think it was the owner of the Sun Times that basically said, or not the LA Times, that Trump is putting executives into place versus, political, people that have been political positions. And so those are the type of people that are better suited to deal with emergencies and things like that. In theory, don't know if that's true.
In theory,
Yeah,
we'll see.
exactly. All right, cool. There's a lot going on, right? So we got to pick our poisons with the show. We're gonna take a
Yeah.
break. I don't know if we have a topic of the week. We do have a couple of interesting statistics that I think running, getting your feedback on. And then we've got your pick of the week. We've got our speed round. The markets are in chop mode. So what does that mean? That means you probably should be putting those premium trades on, right? AJ, today's options
Yes.
expiration.
Yeah, we should actually look at what the charts have done. So we'll do that when we
We'll
come
do
back.
that when we come back. I did bring up AJ's quick links page. So this has all the goodies, all the socials. TikTok's still up there. It still works. We're on the clock here. We're gonna be keeping an eye on that. Very interesting story developing with the TikTok social media getting close to shut down. AJ's free indicator suite. You will see us running through some charts with some nice little buy and sell arrows. You can go ahead and get that in there. Some other freebies, AJ's free daily workshop. So when we talk about premium selling, in a market that's going sideways, this is good for us. This helps our portfolios. And if it's not something that you're utilizing, check out the webinar. These 4 strategies are a great way to get started. We will be touching on some of those topics there. And then coaching, and then just the overall trading trainer community, which is growing every week. So shout out to all the new subscribers, all the new fans. We are broadcasting live. So if anybody watching has anything that you want us to run through, if we have some time, we'll get there. Otherwise, we're going to take a short break. We'll come back, talk a little bit of TikTok, get AJ's pick of the week, and dig in some more
Look
stuff.
at the broad
there
market.
We go. Sit tight, folks. We'll be back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So AJ, question: during your time in California, did you ever have to experience any fire related stuff?
No fire, but definitely earthquake.
Yeah, because I see that video, and I know we did that one in Santa Monica, which is right under the Pacific Palisades, and it's just crazy to me how night and day, like last week versus this week, was, where we're back to beautiful sunshine, 70 degrees, palm trees blowing, and then last week it was like an apocalypse, and so it's crazy to see the shift. And I was just curious if you would ever experience anything like that, because I never have. This was my first fire, and we're starting to see more. And it seems as if the overall economy, just the nation, has really rallied and trying to overcome it, even though it is a pretty big blow at the end of the day. There are some interesting insurance debates that are arising from there, with some of those super fancy. I mean, one of those is like one of the houses that burned down was like one of the most expensive houses in the country. So interesting situation. Glad to see things are starting to turn around for the positive in general. All right. Let's see. I do have one statistic that caught my eye that I would love to get your take on before we dig into some of the more detailed stuff. This was I remember that we talked about how when the overall market is increasing, it's being led by a few names. This statistic caught my attention. Essentially, is when adjusting for money supply, the Nasdaq is currently retesting levels reached during the tech bubble of 2000. And so I'm curious if you feel any tech bubble sentiment, because I know you kind of were involved in that era. And do you feel the same way as a bubble might be occurring, or what are your thoughts on this statistic in general?
So it was a little, I feel it was a little different. I was right in the mix in the late 90s all the way up through 2005. So I saw the tech bubble grow, and then I watched it bust. And I was involved. I was in management at Hewlett Packard watching this. But one of the things that we saw big time back then was startups. Tons and tons of startups, little companies coming up that basically didn't care about profits. They were playing the long-term game. And there was startups I interviewed when I was job hunting in the late 90s at so many startups, and then I wound up getting a very good position at Hewlett Packard. So I stayed with Hewlett Packard, which was a bigger name. Um, the startups that I had interviewed at all disappeared during the trading trainer bust. And I'm not seeing that as much now. What I'm seeing now is a handful of really big companies getting all the attention versus even some of the companies out there that have been there for a while. And last week we looked at the S&P 500 equal weighting index, the SPX EW. That is, when we look at the SPX EW and we compare it to the SPX, so the difference being that the SPX, the way it's calculated, the companies that have a bigger, cap rate, those ones get more weighting in the index. So basically, you can say that the SPX has a bias towards those big companies, and those big companies are like, you can name them: Nvidia, Apple, Microsoft, Google, Tesla, Amazon, even some other companies like Walmart. But some of the other companies have even fallen off of that list, like some of the pharmacy companies, some of the retail companies are no longer on that list. So it's really those big large caps. And when we see the divergence, so you can see I've got the SPX EW on my screen right now. I'm going to add in an overlay of the SPX. And so you'll see just since the end of November that the SPX is now much higher than the SPX EW. And whenever I see that, I know that there's money coming in, usually because of the talking heads on TV, money coming in that otherwise wouldn't be in the markets, and it's all going into those big companies. That's much different than what happened during the dot-com, boom and bust. So it's different, Sip. It's different.
Yeah, I kind of see how that could be the case, because there were so many companies going public without actual financial revenues behind it to drive their valuations. And I think the optimism for every tech company that was a .com to be successful was much stronger than the reality of sustaining through some of those, those bubbles. But it is something that I think is catching my attention a little bit more than usual, is the big names driving the overall market, and it kind of being deceiving in that, well, everyone says that we're going to hit all-time highs, but is it all-time highs? It's like 8 companies hitting all-time highs. So it's not a true reflection of, the overall market. But
I think it's, if you don't mind me jumping in here, I think it's actually more of a reflection of what we're seeing in the US economy, which is this huge gap between big income earners and low income earners. That's exactly what we're also seeing in the markets, is you've got just a handful of companies kind of running the show, and the rest of the companies doing their thing.
Which is why, many of our viewers might be looking to put their money to work, start making some investments, right? You have a portfolio, you have some strategies, you can buy some stocks, you can sell some stocks, but then you can start to use options in a unique way with these 27 different variations to put money to work, to use these kind of insurance concepts to collect a premium, almost like a paycheck every week. And so that's why he created the program. That's why we've got all these wonderful, useful links. So once again, if you're interested in learning more about AJ Trading Trainer, his approach to the markets, head on over to this link, sign up wherever you find some interest. Hit that follow, hit that subscribe, hit that like button, show us some love. But AJ, this week we've got a pretty good name that on your radar that you see an opportunity in, and I think this is a good name and example for any of the new viewers to jump in on, because it has such a classic reputation. And so without further ado, let's dig into your pick of the week. This week is General Motors, ticker symbol GM, legendary automotive maker.
Yeah, before I do that, Sip, I'm going to just give about 1 or 2 minutes to the environment overall that we're in, looking at the charts. Last week, when we were looking at the broad market, namely the S&P 500, we had gotten a false signal for a bottom being found, and that false signal was on January 6th, and the bottom we were talking about was January 2. Well, this week we got a real confirmation, as you can see here with this crossing of the 3 over the 5. I mean, that wasn't just a one day, fart in the pan. This was an actual crossing that we saw, and that confirmed a January 10th bottom, so last Friday. And when I put my ruler on things, so let's first let's take a look here at first the sentiment. So a little bit of a bearish move. Let me zoom in here. And let me ditch some of these things that are view now that we know that we had a real bottom found. This is what it looks like. So we found this bottom, and now we're on our way up. And today we're trading up near this level of descending resistance. And so I actually believe we'll probably find a top either during today's trading session or early next week and start coming back down. With that said, I like to throw in my rulers so that people kind of understand where I'm coming from. So if I draw in my rulers, we'll get them in here in a split second. There we go. You can see here, this last move down, it looks like we're right on the mark from red to green. This is so close. If you measure this movement, our demarcation of the red area to the green area as at a 123.6% retracement. The actual retracement we did was 123.15. So there's literally a fraction, but we reversed in the red zone. And now we're heading up into the next red zone. So we've had red zone, red zone, red zone, red zone. The environment that we're trading in is clearly sideways. Whenever you go red zone, red zone, red zone, red zone, you're in a sideways choppy market. You might have a slight downtrend to it, but for the most part, the market's moving sideways choppy. And if you do this same analysis on the equal weighting S&P, it's even more clear that we're in a sideways choppy market. And the VIX is a little bit on the higher side. It's not too high that some of our fears are turning into actual reality of things going wrong, but instead it's raising our premiums. So all to say, you guys, if you're not premium selling right now, then you're leaving money on the table. So GM, right? GM, they're poised, especially with the new administration coming in, to have a pole position. One, because President Trump is going to be extra hard on China, who's really the big competitor to the U.S. Automakers. I don't think you're going to see any Chinese vehicles coming here into the U.S. anytime soon because they're tariffed beyond belief. In fact, they started being tariffed during Trump's first administration, and Biden didn't remove those tariffs. If anything, Trump is going to make them more. We're not going to see the China car manufacturing is not going to be coming to North America or probably Europe anytime soon. So, with that said, GM is poised to do even better. They're at a bottom right now, and I understand that we're not in a mature sideways trend, but I think this is a great opportunity. If I put one of our free indicators on there, SIP, I'm going to use the MACD, the MACD, and I'm going to have it programmed for the fast MACD, which is 6, 19, and 3. And I'm going to calculate it. Our free indicator lets us do this. We can change the calculation point from the closing prices to the volume weighted average price. So you get a little bit more of a volume validation in these arrows. And a bottom was found, and we haven't gotten the follow through yet. So we want to wait for the follow through, but I'm poised to start to load up on either GM stock in lots of 100, or there's a substitute option that I might be interested in instead, and it's about half the price, and it's the GM September expiration $30 call. So either one of those I might load up on, and that would allow me, when first of all, it'll allow me to take care of if any movement up, even if a few dollars moved up on that back month call would be leveraged. That's great. And then if I stall like I did before at this level of horizontal resistance, $60, I could sell near term at the money call premium, which is what we love to do. And then I could buy some protective puts down here at the $50 strike price. And now I've created pretty much a hands-off, low risk, if not risk-free trade that I can then, rinse and repeat, just like today is options expiration date for, the monthly January option, the weekly January 17th option, and this is the annual expiration of the 2025 leap. It's all happening today. We can take advantage of those option expiration dates and just turn them into paychecks every month with a stock like GM.
Yeah, I was very excited when I saw this in our notes this morning because I saw a video or something that was trending on the internet. And then
Right.
I was, oh, GM is making a comeback not only with their stock, but it looks as if these traditional, I would call it maybe like 80s vibes, like these were big in the 80s, are going to be making a comeback in 2025. So there may be some I don't know, younger Gen Zers that are going to be entering the market, because it seems to be a fad of like the 90s coming back, the 80s coming back. But when I saw a couple of these clips of the new GM big body, I was like, okay, I could see there being some momentum to that because it is cool looking. And then if it's got all the new features like they have in the new cars with the bigger screens and like the connectedness of everything, a lot of cool things coming out of GM and just the auto industry in general. So exciting stuff. GM, AJ likes it for his pick of the week. We'll keep an eye on it, and like you mentioned, this is something that you could probably keep on your watch list for the rest of the year, right?
Oh, absolutely. And, GM is going to be reporting their earnings at the end of this month, but I'm not too concerned about that. I'm going to weather that. I'm going to go ahead and pay attention to the follow through to the signal that we got on Wednesday. Again, I tried to look for follow through yesterday, didn't get it. looking for follow through today. So far, it hasn't come in. But when I get follow through, whether it be Monday, Tuesday, Wednesday, is when I'm going to stock up. I'm not too concerned about the earnings. I could actually look simultaneously to do one of our earnings trades on GM, which we didn't even talk about. But I'm not so worried about the earnings at the end of the month for GM. Now's the time I want to stock up on some of this stock or some of this substitute option.
Yeah, we may have to take a look at, and I don't know if you and the team are at the earnings calendar, because
It's coming
we
up.
do you do have some of those short-term plays that we've reviewed that
Yes.
are becoming a little bit more popular. I feel like, just because people love, I mean, boring is good, but during earnings season, there are some of these opportunities that present themselves that if you
Yep.
use this wonderful options tool, you can take advantage of it. And we've seen some really good examples. So if you are interested, head on over to the YouTube channel, type in earnings, and we should have 4 or 5 specific videos on that setup. So I imagine in the next couple of weeks we'll have a couple more. So we'll keep that in mind. So
Did
AJ
you by
likes
any chance pay attention to any of the CES, the Consumer Electronics Show?
a little bit, a few things.
The
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 Clear
reason why I'm
TV was cool.
asking the reason why I'm asking is some of those companies, and we can actually feature it. We talk about earnings as being when we can do these quick trades, but some of those companies, I was able to do some of those quick trades based on CES, not necessarily
Uh,
earnings. So it's any event. Earnings is just, every quarter we have earnings, and that's an event. But any event like a CES, or in the pharmaceutical world, a release of a drug, any event is one of these things that you can do one of those volatility trades on. So we should talk about that more on another show.
For sure. And I think CES was a little bit overshadowed by the fires, because it was basically like the same week. But I did see a couple of cool things come out, a lot of AI stuff.
Yep.
So
Some of
maybe
those
I'll come up
companies
with a list
popped.
of, for sure. That's an interesting concept. We'll circle back, and maybe there's some unique new names in the space. I know one name I've been looking at is Serve Robotics, which is the lunchbox on wheels that does like delivery. I
Hmm.
mean, it's up like over 100% since I even started looking at it, and
Hmm.
these robots are everywhere, and
Hmm.
they seem to be getting the job done. So very interesting concept. Let's keep that in mind. So AJ likes
Yep.
General Motors. We've got 3 names in our speed round this week that the folks all across the country, AJ, want to know your thoughts. Do we have any opportunity? So let's start over on the west side of the country. William in Flagstaff, Arizona, wants to know, AJ, what you think about InMode, ticker symbol INMD.
And William sent us this actually, he wanted us to do a follow-up because he sent this to us back in the beginning of December. And so in the beginning of the December, William had noticed this top forming, and he had, gotten his follow through, and he wanted to know, should he be shorting this stock or buying the substitute put options? And we said yes. Well, now we're getting these signals. He got a signal here. He actually got some follow through. I'm not sure if you followed up on that, William, or if you're here with this new signal and you're looking for follow through, which we haven't gotten yet. Either way, what William probably did, and he's probably asking for some, either validation. You probably sold your put premium, right? And you bought a protective call. I'm assuming, especially if you got this signal here and you sold your put premium, so you would have sold some sort of near term at the money strike price here. And then you bought yourself a protective call. I'm not sure which strike price you used, if you used 20 or, probably you used 20. So, you might be afraid, right? Because if you had sold premium here, you might be wondering, am I going to get exercised today? If you get exercised, I don't think that's the worst thing in the world, because basically you get whatever, if you are going to get exercised at the $17 strike price and you shorted this stuff at the $20 strike price, you just locked in that $3, right? You just closed the initial covering position and got that $3 spread. Plus, you're left with this protective call that doesn't expire for 3 to 6 months at the 20 strike price. Any movement up is going to make that protective call, doing well. So I think you're just going to follow your trade plan, and your trade plan says get exercised out of the initial covering position and follow that call. You're now long the call, and you're poised for any sort of price action to move up. I think you're actually in a great place. And if you didn't sell premium back here and you're looking to sell premium now, you're thinking about the February premium. You're selling that, put. You're looking to buy that protective call. I mean, I think all around, no matter where you are on your trade plan, or if you never even listened to our advice and now you're thinking about going long in mode, buying either the in mode stock or buying the substitute call option, I think you're in a great place. Just stick to the plan. I know when the plan, when something unusual happens, like you get exercised, you're wondering, what do I do now? My answer is stick to your original trade plan because it's working.
All right, InMode, ticker symbol INMD. Nice to see some of these names coming back around with new opportunities presenting themselves, because that's kind of the trick, or one of the benefits behind the premium selling is it's kind of going to do the same thing over and over. And that's the wonder of it kind of functioning like a paycheck. So
Yes.
thanks for that, William. Moving on to our second name, Trish in mountainy Denver, Colorado, wants to know your thoughts on Himax Technologies, ticker symbol HIMX, another name that, we've looked at not too long ago.
Yeah, again from Trish. She brought it up to us at the end of November when it was down here, and we were talking about buying some Himax, and we were talking about buying some of those call options as a substitute. Here's a case where this thing didn't stop. It didn't stop where we expected it to, around the $6.50, $6 to $6.50 mark. It kept on going. And so when it does that, when it breaks out of its sideways channel, generally what we find is, instead of selling premium, this is your opportunity to go ahead and just sell the initial covering position. You'll make more instantaneous cash than you will with selling the premium. And because it's broken out of its channel, it becomes a little bit less predictable than if it would have stuck with that support and resistance at 525, 625. So hopefully at some point here, you took your money and run. And now my advice is, we need to wait. Oh, my chair just gave it. I kind of went into the reclining position. We want to wait for this to become another mature pattern. And so mature for us is 2 tests of support, 2 tests of resistance. Whether that support and resistance is going sideways, or it's ascending or descending, we want to let a mature channel form, so then we can decide what to do next. And so right now I see that, we popped up, we kind of consolidated a little bit. We may be popping up here. I want to let this go a little bit longer. I want to let this, really give me a clear, is it that resistance is at 9 and support is at 750? I want to become more comfortable with that before I start trading options on that. So again, hopefully you took your money and ran, buying this at 5 and selling it at 8.50. I mean, that's almost a 60 to 70% ROI on that one trade in a month or 2 time. That's not bad. And now let's just give it a pause and let's let that pattern form again.
Yeah, under $10 stock, which is rarer,
Totally
I think,
affordable
than what we look at, and it's definitely something to keep on the watch list for the rest of the year, for opportunity there. So thanks for bringing that back to our attention, Trish. Moving on to our third and final name in the speed round, Emily from Concord, New Hampshire, wants to know, AJ, Perion Networks, ticker symbol PERI. I'm not even sure what these guys do.
Actually, neither am I. Maybe
Networks.
maybe you can look them up. But look, I decided to pull this back a year. Last time they did earnings was February 7th, so we expect something around February 7th. They kind of pulled back, and then they've been at this same rate between $8 and $10 since June. So I don't expect that. And they went through 2 earnings seasons. Okay, so I'm kind of getting a bigger picture. And sometimes you have to do that. You have to pull back and look at the history and not just look at what's in the present. So I almost feel like let me look at the movement. So about $8. You could probably figure out how to trade some premium on this. I'm a little confused. Maybe, yeah. My fast MACD is maybe a source of signals, but maybe you want to look at different ways to identify tops and bottoms and see if one of them is even better than what we use typically. Because there's a lot of false positives I'm looking at here. So yeah, I think that there's something you could do between, this $8.25 and this $9.25, $9.50. I think there's some premium there, and it looks like we're, marching up higher. So you'll wait for your top reversal, and then you'll either short shares of Perion in lots of 100, or you'll see if there is a substitute put option. In fact, let's use our options lookup tool. This thing is so easy to use. I can just use it right here in real time. Show price components. That's how you do it. Go out to probably next year, 2026. And we're trying to see if there's a good substitute option that's got some liquidity. You might be able to get by with, gosh, if you can get a hold of some of these either 20, I think I'd go with the 20, the $20 or even the $25. The bid-ask spread's not drastically large, but it is large, so I'm wondering about liquidity. You might be better off shorting the stock. I think you might be better off shorting the stock than buying a substitute option. So we'd look to short the stock. Make sure you have a margin account, because in order to short stock, you need to have a margin account. And then you would buy, you would sell your put once it bottoms, and you would buy your protective call with a strike price up here. So there's that trade. But I also think, based on what we see has happened during earnings, I think you try to do one of our earnings strategies. And you have a couple weeks to prepare, because we're not expecting earnings for Perion Networks to happen until the first week of February. So I would be, looking at how I could trade that, volatility rush that leads into earnings, and then the day of earnings, there's always a volatility crush. So that would be a predictable pattern that you could probably make a nice chunk off if you prepared for that trade. And, based on what happened the previous earnings, look at a calendar spread for that, like we talk about on this show.
Yeah, 2 in a row in that $9 to $10 range. So another good name to add
affordable
to add to the watch list. And just a little bit of backstory on what they do. Global technology company that provides digital advertising products and services. 640 million in revenue. So they make some money. They're in the ball game. It's not one of these fluff companies. Perion Networks. So thank you for that, Emily. Lots of stuff going on. Monday I think is a big day, right? With the inauguration. Is that on Monday?
Yeah, there's an inauguration, and it's a holiday, right? It's Martin Luther King Jr., so there's not going to be any trading on Monday.
So we'll keep an eye on that. It seems as if the closer we're getting to Trump being in office, the markets are happier about it. Things are kind of going up. Happy to see the ceasefire between Israel and Palestine. That was a bit of good news that came out of some of the global tensions that we've been seeing. So we're in for quite an interesting next couple of weeks. I know it was a little bit slower during the holidays, but heading into next week, what do you have on your radar? What are you keeping an eye on? What should we be looking at before next week's show?
Hey, I'm starting to look at what candidates would be good earnings plays. We're going to get into earnings season. As far as the Fed, you look at the tool that we use, the CME's kind of Fed. Is it the CME? The CME Fed Watch. We're not expecting as much as the market go up and down on a day-to-day basis. We're not expecting the Fed to drop rates. There's no expectation for maybe 1 quarter point rate drop in the next 6 months, and definitely not anything happening at their meeting at the end of January. So, here I am looking at January 2025. Take a look at that. Almost 100% that the Fed's going to do no rate change, right? You look at March, and that number is still, overwhelmingly 70%. They're probably not going to do anything by March. When you start to get into the May and the June timeframe, it's really the June timeframe where there's more of a chance that the Fed will have dropped rates by then, but not until then. So sometime May, June, maybe we'll see a rate drop. And there's so many variables before that. So I'm not worried about what the Fed's doing with monetary policy. I'm more interested in this upcoming earnings season and what we can do there, as well as just maintaining my premium trades.
Yeah, I agree. We'll definitely be keeping an eye on the economic news that comes out. It does seem to be swaying the markets, instantaneously, essentially. And we'll have our earnings plays for next week. We'll take a look at that list.
Start looking at those.
So to close things out, as always, if you're interested in learning more about AJ's trading strategies and the Trading Trainer program, head on over to our quick links. We've got a bunch of goodies over here. The social links, the free indicators. Show some love. Hit that like, hit that follow, hit that subscribe button. We've got some more TikTok and Instagram and Shorts content coming your way. So keep an eye out on that. We certainly will love your guys' feedback. And thank you to everyone from the Speed Round. AJ, thank you for your time. Thank you, everybody, for tuning in. That's all we got for us today. Wishing everyone a safe and happy weekend. Adios, guys.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.